And in three, two, one. Hello and welcome to another episode of Guide to the Grind. My name is Jeff Eady, as always. And after just about a month, maybe a little more hiatus, you are watching Guide to the Grind or listening to Guide to the Grind, where we cover money, mindset, and momentum. It is great to be back. And today I will introduce the apple cider to my autumn day, Mr. Jonathan Tilger. Jonathan, how are you today?
I am doing absolutely phenomenal. Very excited to get back on here, get things rolling, and very excited to speak with our guest today as well.
Yeah, it was nice to. I guess I can stop the share. Little out of practice here. We did take August off, which was nice. A little time to recoup, get some new projects launched, and I will use that as a segue. JT, being one of Canada's top mortgage brokers, you have found something absolutely phenomenal in the market. Attention to anybody who is looking to get into the market for real estate, whether you're a new home buyer, whether you're looking to get back into the market. Jonathan, tell us a little bit about what you have found in the last week and a half or so.
I've got what I'm calling an equity assist program. Essentially, it's a group coming in if you've got less than 20% down to help you get to the 20% to open up more lending options for you. Have a group that will come in, title and the house remains in your name, but you can have an equity partner who will share in the upside or downside of the property while helping you build equity and own your own home.
So if you want to know more about that, JT, what's the email address to talk to you directly?
The best one, jonathan@amortgageplan.com.
All right, fantastic. This is a huge opportunity, and it is actually limited from my understanding. There's only so much to go around, but there is lots left right now, but that's going to go away very, very quickly. Thank you, Jonathan. Let me introduce today our guest. He's one of the nation's top franchise consultants. He is passionate about helping people achieve the greatest level of satisfaction and success through franchise ownership. With years of experience guiding clients toward top-performing franchise brands, he provides personalized guidance and support through the entire process of franchise exploration. Whether you're looking for an exit strategy from corporate life or a semi-passive opportunity, he's here to help you find your perfect match and create a brighter future. Please welcome to the show, Mr. Bob Bernotas. Bob, how are you today, sir?
I am well. Thank you so much. And thank you for the introduction. You read that perfectly.
Not bad after having a month off. So, Bob, why don't you, where do I start? This is a big topic. I love this topic. I have friends who are actually quite well renowned in Canada for doing this. Why don't you tell us a little bit about what you do specifically within the franchise world, and then we'll open up the conversation after that.
Sure. Well, first of all, I'm a dinosaur in the franchise industry. I've been around the industry since, God, I hate to admit at this point, but since 1986, when I first broke into it, back in the video store days, if you guys remember that. You might be a little bit younger than me. But Blockbuster Video, West Coast Video, West Coast actually preceded Blockbuster Video. I had a bunch of those in the Philadelphia area, lost my mind, and went up to New York with them. Owned several other franchise concepts that I've built and sold over the years. I was CEO of a national chain, and I've been consulting for a couple of decades. Used to consult mainly on the franchisor side, helping position companies for growth. But over the last 10, 12 years or so, I morphed completely on the prospective franchisee side, whereby I help people find the right franchise opportunity. So in short, what I do is I just matchmake people with franchise concepts.
All right. So you started us off with a bit of a curveball when we came on here, and said semi-passive franchises as an exit to corporate strategy. Can you elaborate on that a little bit?
Well, what I've found over the years, probably 80% of the clients that I work with don't want to just jump into franchising with both feet. They don't want to walk away from their full-time job. Now, I have franchise investor clients. I have business owner clients that do want to do that. But most of my clients are coming from corporate America. They have a good job. They're earning a good income. They want to keep that perceived safety net, and they want to start building something on the side. And that's where semi-passive franchising comes in. It used to be, you go back, 10 years ago, the only thing that was really available in semi-passive franchising were brick and mortar concepts where somebody could open I don't want to say restaurant because food's never semi-passive, but let's say some type of beauty concept or boutique fitness concept. And they have a manager in place, and then they open a second manager in place, a third manager in place, and then eventually they'll put a general manager in place to run all of them. And that was typically a franchise investor model. I'm seeing more and more franchise investors now really cross over and come into the space of non-brick and mortar concepts that are considerably more inexpensive, and scaling cost is a lot less. So when it comes to people, currently in corporate America that want out of their job, they have maybe in 5 years, maybe they just want to stay in it, but start building income on the side. More and more of these franchise models have now developed semi-passive platforms to support you on a part-time basis. They just support you at a higher level. So instead of jumping into a franchise, doing it full time, you can put typically somewhere between 10 to 20 hours a week in while you do your full-time job and launch that franchise. The more time goes by, the first 6 months is going to be the most intensive in terms of your time, but that actually becomes less as time goes on. You get to a point where, your income from your franchise exceeds what you're doing in your corporate job. It's a decision you can make at that point.
So when I think franchise, I always think, when we spoke a little bit offhand, that my family's been involved in franchises for a lot of years, mailbox, etc., which became the UPS store. But what are, and when I think franchise, I think brick and mortar type businesses. What are some of the ones that are your non-brick and mortar? What's like just an example or two of what those look like?
Sure. I'll give you an example of a concept that I've placed a lot of my clients in over the last 2.5 years, maybe more than any other franchise. Lights just went out. I don't know if you saw that. Hopefully we don't lose power. Don't know what's going on here. But I placed a lot of my clients into a concept. It's not a very sexy concept. They do gutters. They install gutters on homes or buildings. And anywhere from basic gutters all the way up to copper gutters on high-end homes, heated gutters, depending upon the market, obviously. But the reason, I focused on a brand like that is because when you look at their unit economics, what they disclose in their item 19 of their franchise disclosure document, their average franchisee is doing 1.7 top line and dropping 25+% to the bottom line. And that's on an investment that is sub $250,000. So that's an example of something that is non-brick and mortar. You can operate it. You would have a facility. You might have 1,000, 1,500 square foot of warehouse or flex space with something like that. But the advantage to things like that is you can buy multiple franchises, but have one location. So you might have a 1,500 square foot flex space location that you centrally locate in 3 territories that you bought. And here's where the economies of scale come in. With those types of franchises, the first franchise fee might be $50,000. The second franchise fee in this case is $40,000. The third franchise fee is $30,000. So most of my clients are doing 3 or more units. That would be equivalent to perhaps looking at something like, if you're familiar with Crumble Cookie or Orange Theory.
Orange Theory, yeah.
Well, those concepts are in the $700,000, $800,000, $900,000 range. If you open one, you open another one, another $700,000, $800,000, $900,000. You open a third, same thing. Whereas these concepts, you're just buying more dirt that you scale into over time by adding some personnel and maybe adding another vehicle. So they're very scalable concepts that just don't cost a heck of a lot of money to get into. So a lot of my clients, and I always ask the question up front, and a lot of my clients fall into one of these buckets. I ask the question, there's a scale of people that I work with, a spectrum of people that I work with. And on one end of the spectrum, I have what I term as, for lack of a better term, ideologues. Someone who is driven by passion. They love their dog, so they want to be in a pet-related business, right? Then on the other end, and it doesn't matter to them how much money they make, but that's what they want to do. And on the other end of the spectrum, I have what I term, for lack of a better term, my show me the money people. They're interested in ROI, earnings. They don't give a darn what the concept is. what the widget is, as long as it's something that's ethical and provides valued service to the community. And the vast majority of my clients are looking to do it on a semi-passive basis. So that would be the concept that I just shared with you, would be something that I would show a candidate, a client who fell into that show me the money bucket as opposed to the other. But when you're looking at brick and mortar retail, scaling is always more expensive, simply because you have to duplicate that cost each time. That's why I like the non-brick and mortar concepts.
So do you work with folks that are looking to franchise their own concept, or you find people that want to get into franchises kind of like a broker?
Yeah, I find people that want to get into I'm past the point where I'm going to work with anybody I'm too old for that crap anymore, but I've done it. I've done it. It's a heavy lift. And it's tough for franchise companies to break into the industry and have success. Really difficult. Once they're established, the franchisees tend to, with the better companies, and end up doing really well. But launching a franchise company, that's for young people.
I have a friend up north of the border here, Angela Brown, that does that, and she does very well with it. She's awesome at what she does. But yeah, it sounds like a ton of work. Very rewarding, though. Yeah. So how did you fall into this, or get into it? Was it specific, or did you fall into it?
Yeah, consulting or franchising in general?
Franchising in general.
My first franchise that I opened, which was a West Coast video franchise, I was 28 years old. I realized corporate America is not for me. I spent, I think, all of 3.5, 4 years in corporate America and decided I don't want to be there anymore. I started a small computer business. I was, maybe paying for itself, not much more than that. Saw the opportunity to get in, and it was a hot industry at the time, video rentals. So I saw the opportunity to get into that. I begged, borrowed, and stole to get the money, put the money together for that, and opened the first unit on Wayne and Shelton Avenues in Philadelphia. Rough neighborhood, by the way. And that unit opened in December of 1986. That January, a month later, it was the top unit in the chain, which became my springboard to open more of those West Coast video franchises, and then eventually get into some other franchises as well.
So you're kind of one of those lucky people that figured it out right away.
I was lucky, yeah. Hey, right location, right time, right concept, and it's so easy to fall on the wrong concept. And I feel terrible. I work with people frequently that have gotten into franchising in the past and have not done well, and they come to me with a really bad taste in their mouth, but they landed on the wrong brand, which is easy to do. If you're working with the wrong consultant that may not really have the background to help you in that regard, things could end badly. Or if you're doing it yourself, what most people do is they get online, they start to search for franchises, and you have no idea what you're looking at. You're seeing what they want you to see. Not all better companies tend not to advertise on portals, but that's what you're really landing on. And when you land on these portals, and you connect with the company, 95% of the people who are coming to these companies through these portals end up not being qualified. So the companies waste a lot of time. The candidate, the prospective franchisee, can't see what's behind the curtain when you're doing it that way. So, that's where what I enjoy so much about what I'm doing now, being a consultant, which I've done for a long time now, is making sure people are checking all the boxes that they need, not just from the standpoint, hey, I like pets, I want to be in the pet industry, but first and foremost, you got to make money. If I don't care how passionate you are about something, if you're doing poorly financially with it, you're going to learn to hate your passion real quick.
Absolutely. And is that what you're finding with a lot of people that are trying to get out of the corporate world? Like maybe they don't have a pension, or they just lost their passion for it, and that's why they're getting out?
Yeah, most people that I work with that are in corporate America, I mean, I hear the same story all the time. I want freedom. I don't have time. I'm working, 40, 50, 60, in some case 70 hours a week. I never see my family. I'm traveling. I have to get out of the rat race. Some can be really happy with their job, but they just don't see it, forever. They don't see themselves in that role forever. So many of my clients that I take on that are currently in corporate America, they typically have a vision that they want to be out of corporate America by a certain time. And sometimes it happens a lot more quickly. It's unexpected. If the income from the franchise that they acquire can help them reach their goals more quickly than they expected. I'll give you an example. I mean, just again, jumping back to that one concept, that gutter concept. I placed one of my candidates in that concept almost 2 years ago now, and I can't get into his specific numbers, but I will just tell you he did really well. He and his wife both worked for the same company in corporate America. They both had solid six-figure incomes. They got into this to do it on a semi-passive basis. They completed training with the company. They started, and within 2 months, they both quit their jobs and just dove into this full time because they saw the writing on the wall. They saw how quickly it was ramping up. And they've literally, from year 1 to year 2, they've doubled what their revenue was, and they were doing phenomenally well year 1. So they far more than surpassed what their combined incomes were. So in this case, it worked out for them.
And if they're doing it semi-passively, what do you sort of outline here? Here's what your day is going to look like. How much time do they have to put in? Because, I mean, just going back to the gutter business, I'm assuming what's their biggest role then? Is it sales, or is it just hiring the right people and managing those people?
Yeah, in that case, it's managing the manager. So if you're going to do that on a semi-passive basis, the company like that's going to help you identify and hire the right manager. And they'll give you a lot of guidance on that. And they'll help you hire anybody else that's needed. They'll help you procure whatever you need to run your business, including, a truck initially. Kip, my guy from the guy I was just mentioning, he's on his third truck now because he just couldn't handle the volume with one vehicle. But it really depends upon the model of the franchise. In some cases, you're just going to be managing a manager. In other cases, the concept is simple enough that you can operate it with a couple of people and put 15 hours a week in and not have to have a manager. I'll give you another example. I mean, I just bought a franchise myself. So I'm also a franchise investor, and yes, I get high on my own supply sometimes. So I bought this concept. It's a men's health concept. And units wise, it's about $300,000 to $325,000 to open each unit. I had a client locally where I am, only about 45 minutes from me, that fell in love with this concept when I showed it to him, and but he was a little bit short from a cash perspective. And I love the concept. I trusted him as an operator, and I love the market. So I raised my hand and said, I'll invest with you. And one unit quickly turned into 3 units. I brought a couple other guys in, and now that's turned into 6 units. So we just signed 3 weeks ago, and we're going through the onboarding process and so forth. But the company just kind of guides you through all of these steps. We will go to a training. I'm not going, but the guy that I brought in, my client, he's going to go to training. But it's just a step-by-step process. And what's important in semi-passive franchising to understand is that it's a business of a box. They're not just throwing a manual. When I broke into West Coast Video back in 1986, I got a manual, I got a week's worth of training, I got a pat on the back, and good luck, right? And then somebody would stop in maybe once every 2 months to say, are you in compliance? Are you doing everything the way you should be doing? But franchising has changed dramatically, at least with the right companies. There's lots of companies out there I wouldn't go anywhere near. I'd politely suggest that probably half to 2/3 of the companies I wouldn't go anywhere near. But then there's some really, really good concepts out there that are top of the heap type concepts that they're just winners.
So this is obviously where somebody wants to call yourself to help them navigate. But what's your vetting process to say, hey, this is a good franchise versus this is one you don't want to touch?
Yeah, great question. First and foremost, I look at the unit economics. I mean, how well are the franchisees doing? If they're not doing well financially, there's no point in taking. I don't care if everything else, every other box is checked. It makes no sense in looking at it any further. There's also, what's behind a company. In franchising, the dirty little secret is that, hey, I'm going to identify this big brand, Subway, whatever it happens to be, and I'm going to buy one of those franchises. You can't. They're all sold out. There's a reason why it's a big brand and you're recognizing the brand, or the only thing that's left are tier 2 and 3 territories that you do not want to go into. So one of the things that one of my golden rules is I only work with franchise companies when there's something bigger behind them. They have an executive management team that has been there, done that before, and built franchises. Really understands a franchise model, or there's a real strong FSO behind a company, or a combination of two. FSO stands for Franchise Sales Organization. Now, that would suggest that, hey, we're just interested in selling your franchise. But with the better FSOs, that's not the case. I mean, one that I work with, they have 27, 28 brands in their portfolio right now. Love their brands. But one of the reasons I chose to work with that company pretty closely is because of their vetting process. They are extremely selective with the brands that they bring to the table. They only look for semi-passive brands. So if they don't offer a semi-passive model and have put those tools in place, they're not going to get into their portfolio. Tons of capital you have to have behind you, a strong management team behind you. They typically will review 200 plus brands per year. Usually only a small handful is getting into their portfolio. Gives me great comfort to work with an organization like that.
So let's flip it on the other side. Let's say I'm looking to make my exit from corporate America. Obviously, the first step would be calling you, but what can I expect on that road? And like, how much money should I have? Where do I start?
Yeah, well, the money piece is going to be all over the map. I mean, there are franchises you can get into, total investment 100K. I'm not saying those are the best franchise opportunities, but there are some out there that are in that 100K range that are good opportunities. So you're really looking at a starting point of total investment of about 100K, going up to how many millions would you like to spend? I will tell you also, though, that there's a ton of really good brands that are going to fall between 200 to 400K range that have pretty big upsides to them. Like the gutter concept that I was mentioning. I mean, you can get into it for as little as 150,000, depending upon. But if you want more territory and you want to start, and buy, let's say, a truck up front and a gutter machine up front, as opposed to financing it and take advantage of tax code 179, depreciate it first year, then it's going to cost you a little bit more. But if someone says, hey, I can put 50K into it, I can put 100K into it, then typically from a borrowing perspective, and I work with the largest lending entities to the franchise industry, that's part of what I do. Also, I help people get financing. Then typically the rule of thumb is 20% capitalization. So if you're putting 100K in, we can look at concepts up to 500K. 50K, we look at concepts up to 250K.
Huh, that's really interesting. I didn't know there was financing for purchasing franchises.
Yeah, well, it's not for all franchises, but the ones that have been vetted, the ones that lenders are comfortable with, and the entities that I work with from a lending perspective, they know the banks that are comfortable working with franchises and know the franchise brands. I mean, if one of my clients goes to their local bank, 9 times out of 10, the bank's not going to be interested in, oh, this is a startup, we're not going to fund the startup. But banks that are familiar with franchise models and a specific franchise, they're comfortable with it. They know the success rate of that franchise, of those franchises, and they're comfortable with moving forward.
So why franchise over starting your own thing?
That's the $1,000,000 question. Look, I'll start with this. There was a study done a number of years ago by the Chamber of Commerce, and they studied a whole bunch of independent businesses that all started right around the same time, and they tracked them for a 5-year period. They also studied a bunch of franchises, different franchise companies, models, that all, again, started around the same time, and they tracked them for that same concurrent 5-year period. At the end of 5 years, roughly about 50% of the independent businesses were still up and operating, which surprised me. I did not think it would be that high. 97% of the franchises were still operating. And that even includes some that I would not go anywhere near. So just in general, having a process, it's not a question of, okay, I'm going to open a franchise and I have to figure this out on my own, and the franchisor already has the instructions, the paint by the number instructions for you, and they have a coach they assign to you that works with you on a regular basis, and you have peer groups that you're talking to on a regular basis, sharing best practices, things of that nature. But they also they put a bunch of tools in place to support the franchisees, and it's looking at the number of, let's say they have 100 franchisees in their system and they've been operating 10 years. So it's not, hey, we have 10 years of experience. It's 10 years times 100, because all that data coming from those franchisees, all the wrong steps, all the right steps are filtering up to the franchise company, and they're constantly making adjustments. Does that make sense? I hope.
Yeah, absolutely. Absolutely. I mean, I kind of knew the answer to that already. It's just a higher success rate than striking out on your own, but some people are more inclined to do their own thing, right?
Yeah. I mean, I've done it both ways. And I can tell you, I've had one company that I opened, I did quite well with independently, but there were a couple others that I opened that I didn't do so well. Any franchise that I've opened, I've done well with. So, you know, even, and I as much experience as I've had in running lots and lots of businesses, I wouldn't consider doing it on my own. To me, it just doesn't make sense to do so. Yeah, you're giving up, and the question always becomes, well, I have to pay them. Well, yeah, you're paying a franchise fee up front, which usually they're losing money on because of the effort, the resources they have to put into the franchisee, especially in the first 6 months, a year, to really get you up and running and spend a ton of time with you to make sure you're successful. And they're vested in your success. If you don't make money, they don't make money. The companies that tend to do the best and their franchisees succeed, they're the ones that adopt the attitude, your success is our success. And I was going to make a point there, but I totally lost track of what the hell was going on.
Well, I want to go back to a point that you just made. You talked about hey, with a franchise, they've been in business for 10 years, but they got 100 operators, so it's 10 times 100 as far as years of experience. Mm-hmm. How do you find, especially I'll say with franchises where you've got territories and you're sort of your neighboring territory with somebody else, how do you find most of the franchises are with, I'll call it sharing practices, sharing ideas, as opposed to, hey, I've come up with this revolutionary way of doing this. It's getting me all kinds of business. I want to keep it a secret so I can scoop the business from my neighboring franchises.
Yeah, well, look, when it comes to certain maybe marketing and advertising approaches, depending upon how much latitude the franchise company gives the franchisees, it's really going to depend. But when someone comes up with something, typically the franchise company isn't just going to allow them to do it. They want to test it first. They want to make sure, they want to protect the brand for everybody's sake. Because somebody comes up with a great idea, 5 people come up with a really stupid idea, it can really damage the franchise company. So there's conduits for bringing that information to the franchise company. If it's a small enough company, you might be able to call the CEO and have a conversation with them. It's a larger company. Typically, there's a conduit to get that information up to the company. Then they make a decision, maybe with you, as to, okay, how do we test this? How do we roll this out? It may be something that's already been tried before and it failed. So they're not going to do it. They're going to explain to the franchisee it's not going to make sense. But if it makes sense, either they'll try it at corporate stores or locations, or they will have certain franchisees, and they may include that franchisee that brought it to them and say, hey, okay, we'll do a test market with you and maybe a few other franchisees so we can cross a few different demographics and see how it works in different demographics.
So go ahead.
No, so my point is, usually franchisees play nice with each other. There usually isn't those types of battles whereby they're trying to keep something from another franchisee. When you're talking about franchises that are brick and mortar retail based, it's your draw area. So wherever you're going to draw from, that's where you're going to draw from. But when it's a non-brick and mortar concept where you're operating out of an office, some flex space, maybe a small warehouse, you have it centrally located in maybe multiple territories that you acquire, but you own that territory. No one can step into that territory, nor can you step out of that territory and start marketing or doing business outside of that territory.
Yeah, that's I just wanted to kind of, I partially knew the answer already, just because I mentioned I've got some experience in the franchise world because my family was involved and my sister still is involved for many years. And just what you said about the big part is and I'll say back to I guess vetting the franchise. Do they protect their brand? Because that is crucial. Because if you want to have the same experience, you talked about Subway. People go to Subway because they know whether I'm in Toronto or whether I'm in or whether I'm down in Los Angeles, I walk into Subway, I know what I'm getting. I know what it tastes like. I mean, they occasionally they'll have maybe a slightly different sandwich down there or different breads they might make in that area because, hey, here's this new one we're just trying out here, but this experience is the same. And that's where trust in the brand comes in. And so you want that.
Yeah, and if the sandwich sucks in Subway, in this particular Subway, they want it to consistently suck in all the Subways the same way. I mean,
exactly.
McDonald's doesn't make the best food. It doesn't make the best burger by a long shot, but they're consistent from location to location to location.
Yeah.
There's really something to be said for that comfort that comes with predictability when it comes to people buying. So how do I figure out what franchise works for me? Because, you're talking about gutters, and though a semi-passive business sounds fantastic, I haven't got a freaking clue how to attach a gutter to a house.
Right. You don't need to know anything. What franchise companies are looking for are just smart people that are driven. They want to build something. They look for people skills, and they look for the financial capability to execute upon their model. They do not want people that have specific skill sets. I'll give you an example. CertaPro Painters, if you've ever heard of them, they're the largest painting franchise in the world. There's 1,000 franchisees around the country with CertaPro, wildly successful franchise. CertaPro, about 35 years ago, I think it was. I mean, their initial model was to seek out painters and bring them in to the family as franchisees. The model failed horribly. They quickly realized that painters don't make good business people. So they reset their model and decided, we're just going to look for people with basic business acumen. They're smart, they're driven, they have the capability, the financial capability to execute upon the model. And then their franchise just blew up at that point. And that's the mentality that 98% of franchise companies have adopted. So they're not looking for specific skill sets.
And how do I figure out that I'm not going to get bored with that after a while?
Bored with whatever the concept is?
Yeah.
You might. But here's what I'd suggest. I've people that I've clients that I work with, and it was a passion play. They wanted kid related, pet related, whatever it happened to be. And I let them know up front, look, these aren't the most lucrative franchises. I mean, some can be, but based on your financial parameters, what we have to work with, may not be the most lucrative franchise. And I've seen it all too often, not just with my client, but across the board, that you're a couple of years into this and you're not doing as well financially and you're busting your butt. It's not fun anymore and there's no passion in it. Whereas people to get into, my clients to get into something that they never would have dreamed that they would ever end up in. And it can be, again, something like a gutter business. It could be anything. And they're doing really well financially. That's fun. Okay. I mean, just building the business and really building something and really making money out of it. That, to me and to most of my clients, that's what's exciting.
Yeah, money does make the world go round, doesn't it?
But you know what? It certainly does. What was that movie? I can't think of it. But anyway, but there's sometimes you can align those things. So the franchise I bought, so many of my clients now it's actually, I believe it's the fastest growing franchise in the country. It's a men's health concept. And I'll tell you real quick, they do TRT, testosterone replacement therapy, huge wave of that coming because for whatever reason, men's testosterone levels over the last 56 years have dropped precipitously. Pick your theory. So they do TRT, they do ED treatments, they do weight loss, and they do peptides like for injuries, for faster healing and so forth. The brand is just blowing up across the country. The unit economics are phenomenal. There's a reason why I bought into this brand. But that's an example of a passion play where you have a lot of people that are really passionate about it, but it also aligns with a really good financial opportunity. Now, in terms of cost, I mean, we're not talking about something that is like again, a crumble cookie or a Orange Theory that's $800,000-$900,000. It's closer to $300,000 to open that concept. Yet the upside is considerably more than your average crumble cookie or Orange Theory, and the profit margin is ridiculous in the concept. So just an example.
And once I guess the question is, once someone gets into it, I mean, going back to, you said, okay, they're doing incredibly well with the franchise, but they've gotten bored of it. What are their options as far as selling it? How's that process? And I guess that varies franchise to franchise, but is it something that's typically easy to do?
You stole my question, Jonathan.
And don't do that again, Jonathan.
I love stealing his questions.
It is. It really depends upon the franchise. But selling a franchise, if it's the right brand, is a pretty easy process. If it's the wrong brand, it's not so easy. And that's one of the critical things you have to look at when considering getting into franchising. What is your exit strategy? So from my perspective, whether my client raises that point or not, whether it appears to be important to them or not, I'm focused on exit strategy, and I'm showing brands that they're going to have an exit strategy. So you want to fall into one or two buckets. Either it's a big brand all over the country and there's a lot of demand for it, but there's no territory. Okay, so then it becomes a situation where it's easy to sell your business if that's the case. The problem is, though, with that bucket is that finding available territories with these big brands that are all over the country it's almost impossible. Everything's bought up, again, unless you want to go into a third tier territory, which I wouldn't put somebody into. The other bucket you want to potentially fall into it are rapidly growing brands, and usually they're growing for a reason. But brands with strong unit economics, they have a good management team behind them. They have something larger behind them that I mentioned earlier that owns them, and there's really strong capital behind them. And to me, it doesn't matter if they're an emerging brand, even if the brand's only 6 months, a year old, but the management team has built other franchise organizations. If that brand is growing rapidly, there's a lot of buzz around that brand. Like the one that I bought, one of, if not the fastest growing brand in the country. I can buy, if I wanted to turn around and sell my territories now before and make money on them before I ever do anything with it, I could do that, right? If it's the right brand. So when someone decides they want to exit 5 years, 10 years down the road, they simply go back to the franchise company and tell them, hey, I'd like to sell my franchise. Franchise company puts it back in inventory, the territory opens up again, and people like me or people shopping online are going to see that it's available, and they're going to put their clients into because a lot of people look for resales too. But the difficulty with resales, in my opinion, is you overpay unless you find a perfect situation where there's illness, there's death. Not that that's perfect by any stretch. That's a horrible thing to say. Sorry. There's divorce, something going on like that, and you can get a deal. Those are few and far between. But otherwise, if someone's selling a franchise, they want to get top dollar for it. And what might be typical is a 3 to 5 multiple of earnings. So if you buy a franchise for $300,000, you're able to drop after 3 years $300,000 to the bottom line. That brand should be worth, that franchise should be worth somewhere between 900 to 1.5 million, depending upon the brand and what it is when you go to sell that brand. But it's the same damn thing. You can buy, if there's available territory, for $300,000 and probably get to that level within 3 years. So to me, resales don't make a heck of a lot of sense.
Now, can I ask a question? It's sort of along the same lines. You talk about obviously the right franchise, and going back to your experience with West Coast Video in the mid 80s, video stores were the right franchise. Fast forward, probably 15 years, and they were the last thing you wanted to get involved in. What are your kind of, I'll say, with trends happening? What are your red flags where, hey, this is the wrong one to get into, or this is the time to maybe exit this one?
Yeah, that's a fantastic question. And I'll tell you, I got lucky to start with. Okay. And you know what happened to the video industry, right? I fortunately got out.
Is it still around? No,
I think there's one Blockbuster in Washington State.
You find every once in a while, there's like some little boutique and dumps basically down some alleyway that like specializes in these weird, obscure movies from overseas. It's still around as an actual video rental store, but otherwise, yeah.
Yeah, there's some markets like in the far out in West Virginia where they just don't have any cable or anything, and there's some movie stores still around, independents. But yeah, that's a great question. From a trend standpoint, having again, that's something I always focus on as well. And really the parameters that I'm looking at when I'm showing any brand to any client I'm working with is it Amazon proof? Okay, that's why I never show any product-based concept unless it's a product/service combined together that Amazon is never going to compete with you. So you have to have those guardrails and those protections. So Amazon proof, is it pandemic proof? Do you want to be in a sit-down restaurant or fitness industry if another pandemic hits? Okay, so that I'm concerned with. Is it recession-proof? There are plenty of brands that aren't really affected by recession, and some brands will actually thrive during a recession. And then other brands, you're going to take a huge dip in sales during recession. So when it comes to trends, I mean, if I had somebody to work with way back when I got into the video industry, I may have still gone forward because it had its lifespan. I just would have probably sold a little bit sooner than I did and checked out in a little better position. But it's important to recognize these types of things, know what the trend lines are. So many clients of mine that I engage with, they want to be involved in food. Food can be incredibly fickle. There's some concepts that have just stood the test of time. And look, I don't want to get sued by Subway, but I wouldn't put anybody, my worst enemy, into Subway. I mean, it's a tough business. You're buying yourself a minimum wage job. Basically, it had its run, and during Jared and $5 footlong, it took a bump up, but then it eventually went right back down to where it was. Food's a really difficult industry. I always try to convince my clients not to go that route. Did I answer your question?
Very much so. Yes, thank you.
Okay.
So you said something to me that was very interesting there. Owning your own job. What's the difference between owning a franchise and owning your own job?
Didn't know I said that, but that's a good point. I'll address it. Did I? maybe I misspoke. But
well, you said if Subway, you're buying a minimum wage job for yourself.
Yeah. Well, I mean, in that case, I mean, you're working it. I mean, if you're going to make very little money in most instances in a situation like that, and you're going to have to work. If you want to make any money, you might have to work it yourself. The people that I know, and I know plenty of people in Subway. God, I hope I don't get sued by them. But I know plenty of people in Subway that have a lot of locations, and they make money with it because they might have 40, 100 Subway locations. There's so many things that you can get into that are so much better than most of them. There's some good food concepts, but and food is fickle. What is in today may not be in 5 years from now. They just they tend to ebb and flow. I'm not sure if I answered your question or not, but
Well, it's just the difference between
Oh
having to
yeah,
work it all the time
yeah, yeah,
and having some sort of lifestyle with it. That I think that's kind of where I'm going with that, is how do you get that
yeah,
lifestyle?
yeah. Well, pretty much any franchise, 98% of them out there, eventually any franchise will become semi-passive and even closer to passive once you have everything's running smoothly, you have the right people in place. Even full-time franchises tend to, unless it's a consulting type gig, that it's a consulting franchise, and when you do it you make money, when you stop doing it you stop making money, but everything else for the most part will eventually become semi-passive and maybe even closer to passive. The ones that are semi-passive, they just start there because the company has developed more tools, a better platform to support franchisees at a higher level. What I the way I like to look at it is, so many of my clients, they're in a job, they don't necessarily want to be in that job forever. Transition is a lot safer from their perspective than jumping out of the job with both feet into a franchise. So again, 80% of my clients are falling into that bucket, and to be able to identify a franchise, move forward with the franchise, and within second year replace your income, third year replace your income, depending upon what your income is, it could happen a lot more quickly, and then the decision becomes yours. I always like to look at it this way as well. I mean, people say, hey, I have job security, I have that safety net. To me, there's no safety net. Can you get fired? Or I mean, if you own a franchise, are you going to fire yourself? I don't think so. But can you potentially lose your job? And of course the answer is yes to that. Can something change in the market that for whatever reason you're getting laid off or whatever happens? Of course it can. So there really, I mean, it's perceived security, in my opinion. You're not going to fire yourself, you buy a franchise. And as you build that franchise, not only are you building income, and income at a much more rapid rate, no offense, Jonathan, than typically real estate, that you can build, but you're also building equity, and you're building equity at a pretty rapid rate. If you get into the right franchise and you're again, your bottom line, a couple $100,000, let's say. I mean, again, that franchise, a 3 to 5 multiple, should be worth somewhere between $600,000 to $1 million that you may have paid $250,000 to get into. In extreme cases, like the one that I bought, I mean, I'm not going to name the brand. I don't want to get myself in trouble with that, but like the top line with that franchise is 1.8. The bottom line is over 600. Okay. On a $300,000 investment, that is an absolute unicorn. Again, there's a reason I bought it, but I mean, round off and say 500K, that franchise, let's say it's throwing off in 2 years, 3 years, 4 years down the line, and you decide you want to sell that franchise, and it's a reoccurring revenue model. Those types of models tend to garner a higher multiple, call it a 4 or 5 multiple, that's suggesting like $2.5 million. You can sell a unit that you may have paid $325,000 to launch. So that's an example of a unicorn. So if a client says to me, Bob, show me the best financial opportunities, ROI, earnings, I don't give a damn what the widget is, as long as it's ethical, provides valued service to the community, and I can do it on a semi-passive basis, something like that I show them.
All right, now the golden questions. You're a wealth of knowledge, wealth of information. I'm assuming your clients pay you. How do you charge, and how does that all work when someone's getting into a franchise and they're using you as their consultant?
Hey, look, if they want to send me a big tip, I'm not going to argue with them. But no, my clients do not pay me. I don't get paid by clients. I get paid by franchise companies for bringing qualified candidates to them. Okay. And the industry works one of two ways. Either people are coming to these franchise companies through the website, through online portals. And like I mentioned earlier, if they're coming through portals or the website, vast majority are not qualified. I never put somebody in front of a franchise company unless I know that they will be approved for that franchise. They're checking all the boxes for that franchise company is looking for. So if I'm successful in taking people through a series of franchises to find the right one with them, they're approved for that franchise. They go forward with that franchise, then the franchise company compensates me. I can take my contract to virtually any company out there, save for the McDonald's of the world and maybe Subway, small handful. and everyone will be glad to accept my contract and compensate me, because anybody I put in front of them is going to be qualified for their concept.
So do people have to be geographically close to the territory, or can they run it remotely?
Good question. It really depends upon the type of brand it is. I mean, in some cases, look, franchise investors that have an experienced team that have been opening and running franchises, sometimes you'll have somebody in Chicago that buys market in Austin, Texas. Why? Because it's a great market there. They know it's a super strong market, and there's territory availability there, but they'll plug a manager in place and they'll manage the manager from afar. So it can be done. Typically, franchise companies want you within striking distance, maybe an hour and a half. The closer, the better. It's going to be easier to potentially operate. But if it's a manager model, sometimes it really depends upon the model of the franchise.
And do you work north of the border?
I do. Yep. With the franchise companies that are both U.S. and Canadian based.
So you could work with Canadian clients potentially.
Sure, absolutely.
Yeah, awesome. That's good to know. We are reaching the end of our time here, so I want to wrap it up and give you enough time to deliver any messages that you want to deliver to any folks that are thinking about doing this.
Oh, thank you for that. What I would suggest, look, if you're interested, make sure you do your due diligence. If you're interested in looking at franchises or thinking about them, do your due diligence, connect with somebody who is an expert in franchising, not just from being a franchisee, not just working for a franchisor, not just consulting, but if you can line up all three. And I know somebody who does that. I've done it. I've been in both. I'm a dinosaur in the industry. So if anybody is interested in having a conversation to see if franchising is right for them, because it may not be right for you, just reach out to me. You can go to my website, franchisewithbob.com, real difficult. Download my ebook if you like. There's a lot of resources on there. You can schedule a appointment with me, a consultation, schedule a short one, 20-minute call. We can just assess your situation real quick and see if it makes sense for us to have a deeper conversation. franchisewithbob.com.
Thanks so much, Bob. That's awesome. JT, anything you want to wrap up with?
Just pleasure having this conversation. I've heard about, I guess, because I do have some connections in that world, I do hear about people like yourself, but I've never actually met someone because I'm not directly in that business. But great conversation. Great to know there are options out there, especially options for people, as you say, that want to invest in alternative things, because this is, I mean, let's call it, it's an alternative investment. It's not, as you said, it's not real estate. It's not the stock market. It's really they're investing in their own business, which, as you've gone through and shown some examples, can, when done correctly with the right model for them and everything else, can show far greater returns than a lot of other investments. So wonderful to know this is an option.
Absolutely. Hey, thank you guys. Really appreciated the time on your show, and love your conversational style. This was fun.
Yeah. Thanks so much. Yeah, we really enjoyed having you here. It's nice to change it up. We do talk a lot of real estate with folks, so I love when we bring somebody on that does something different. If you're listening and you made it this far, thank you so much for listening. Obviously, you can go to franchisewithbob.com, schedule your time with Bob, figure out if franchising is right for you and where you want to go with the next few years of your life. Thank you, JT, for chatting with us or joining us. Always, you were actually more interested in this topic than a lot of topics I've seen. So it's kind of awesome. And if you want to know more about our first-time home buyers program, the Equity Assist that Jonathan's working at, you can certainly go to or email Jonathan at jtillger, TILLGER @gmail.com. Thanks so much for listening. You can listen to us on all the major platforms out there.
You just gave out my personal email. Thanks. Appreciate that.
I'm sorry. Which one was it, JT?
Jonathan at mortgageplan.com.
Jonathan at mortgageplan.com. Well, whatever. Yeah, we've been on hiatus. Thanks so much for listening. We appreciate your time. Thank you, gentlemen, for being here. We will talk to you soon.